Global Forex trading operates on pure momentum, a 24-hour cycle of currencies flowing across borders. But when that massive international liquidity finally meets the strict legal jurisdiction of Turkey, it hits a sudden, solid wall. For Turkish traders, the temptation to bypass that wall is constant. Offshore brokers aggressively target the region with ads promising zero minimum deposits and high leverage to expand your buying power. Following the sweeping 2017 reforms by the Capital Markets Board, the CMB, trading Forex with any unregulated offshore entity is an outright violation of Turkish capital market laws. Authorities like MASAK, the Financial Crimes Investigation Board, actively trace offshore trading activities. The consequences include administrative fines, the immediate freezing of bank accounts, and criminal prosecution. Establishing a profitable Forex portfolio in Turkey is possible, but it requires clearing 3 mandatory legal and financial requirements. The first requirement is absolute. You must route all trading activity through a brokerage firm officially licensed by the CMB, locally known as the SPK. There are no legal exceptions for residents. If a platform does not appear on the SPK's public registry, transferring funds to that broker is illegal. This strict geographic fence provides specific protections for your capital. CMB regulations mandate client fund segregation, meaning your money is held entirely separate from the broker's operational cash. You also gain access to a government-backed dispute resolution framework. While an offshore broker can lock an account with no legal recourse, a CMB-regulated broker operates under an enforceable legal avenue for appeals. Choosing a licensed broker is the first step in a risk management strategy, ensuring your primary exposure is to the markets rather than the platform itself. Once you secure a licensed broker, you must meet the CMB's financial entry point. Current regulations require a minimum initial deposit of 50,000 TRI, or the equivalent in foreign currency. After that initial deposit, your buying power is limited by a strict leverage ceiling. For retail traders, the CMB caps leverage at 1 to 10. This ratio dictates your mechanical reality. For every single lira you have in your account, you control a maximum position of 10 lira. The CMB implemented this limit to reduce the impact of high-frequency speculation. Because lower leverage prevents small price fluctuations from wiping out an account, it often leads traders toward longer-term holds, such as swing trading, to realize significant growth. These financial constraints transform the Turkish market into a structured, lower-velocity investment environment. The final stage of compliance involves the Turkish Revenue Administration, or JIB. Forex profits are categorized as other income and earnings, meaning they are subject to income tax. Turkey uses a progressive tax system. Your net Forex profit for the year is added to your other income, such as a salary. This increases the total height of your taxable income, which can move you into a higher tax bracket. You are only taxed on realized gains. This means any profit or loss from a closed trade is a taxable event, while the fluctuating value of an open position remains excluded until you exit the market. You must also account for the volatility of the Turkish Lira. Profits generated in USD must be converted back to TRY for reporting, meaning the current exchange rate at the time a trade is closed directly determines your final tax liability. Managing all these tax mechanics and exchange rate variables is a necessary component of calculating your ultimate profitability. Operating within this legal framework ensures your domestic assets remain accessible, removing the risk of sudden administrative freezes or legal intervention. To remain compliant, follow a precise routine. Verify your broker's license on the official SPK website, keep business-level records of every deposit and withdrawal, and consult a qualified tax advisor, or Mali Mushaver. Keep the filing timeline in mind. Your net profit from the previous year must be calculated and declared on your annual income tax return by the end of March. Navigating this landscape requires a platform that balances technical performance with local requirements. FXNX provides institutional-grade technology while ensuring its services remain aligned with the legal environment in Turkey. Long-term success in the Turkish Forex market depends on using these regulations as a secure framework for growth, rather than looking for offshore workarounds.